Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, we were so close to getting a breakdown of that bear flag. I was hoping we got the breakdown or the breakup. I just wanted to see this bear flag just break so we could finally get a trend move, get a nice trend phase. So close, guys. We gapped below it. You guys can see here, we gapped below it. And on Friday, the market just slowly, and I mean slowly, just melted to the upside, denying us the breakdown of the bear flag. Okay, so two things that I will be watching out for next week. Obviously, the first one is the breakdown of this bear flag. We tried and failed on the first attempt. Can we try to break it down? Can we break it down on the next one? Okay, breakdown for next Monday, for this coming Monday at market open will be around 394.7ish. So keep that in mind. That's the level that I have. All right. Now the second thing I'll be watching out for is if we don't get the breakdown, can we fill up? Can we fill up to the upside more of this bear flag and maybe test this yellow trend line that I have here on the daily chart? If I go to the daily chart, you guys can see I got the yellow trend line that connects February 2nd, February 14th high. Can we get that third test? And if we get the third test, is that the best time to go short? All right. So yes, guys, this is unbiased price action analysis where Uncle does not do predictions. I just give you guys the setups and the levels. It's very important that if you're trading Uncle style, sheep style, that we are thinking from the mindset of someone that is reacting, not trying to predict, not trying to figure out what's going to happen next. It don't matter it doesn't matter trying to figure out what's going to happen next. What matters most is our ability to react to it in real time. Whatever happens, whether it goes up or down, what's most important is our ability to react to it in real time. Okay? Do not hold on to losers. All right? It does not. Let me tell you guys something. The way Uncle trades, this is a 15-minute chart. I play it level to level style. All right? Whether it's to the upside or to the downside, level to level style. I look for calls or long when a resistance clears, and I look to short or buy puts when the support fails. I say this all the time. And look at this. We had a very slow melt up Friday. In hindsight, if you would have just stayed bullish, it would have been fine, right? But we're not trading in hindsight. We're trading in real time where we don't know what the hell's going to happen next. But we got to come up with a system, all right? As I always, say, short the breakdown of support. Market open right here on Friday, okay? Market open at 391.84, which meant the first support was at 391.4 and first resistance was at 393. Okay, this is alerted in the Discord. I don't think I have to show you guys, but that's what I do. I go a lot more in depth with my analysis on the Discord, and I call out the setups in real time, and I share my trades occasionally and my profits. But right there at market open, the first setup, the first behavior that the price did was break down 391.4. And look at that. I entered puts. And where did I took profit? Right at 390, because 390 was the next support. All right? And then boom. I didn't play this one personally, but this was a recapture right here. False breakdown setup. We broke down 391.4. It recaptured. And then boom. It hit the next price target. All right? I had around 392.5 to 393 zone based on the 200 daily moving average. Okay? Level to level. And then look what happened. This one I played again. We broke back down 391.4. And then I got stopped out on this candle. The next candle, 1045 candle, I got stopped out because it recaptured 391.4. Did I bag hold? No. Did I get a little frustrated? Yes. But that emotional reaction was an indicator for me to chill and reset. Let it go. Reset, let it go. Breathe through my nose. Be in control. I cut my loss. I waited for the next setup. And boom! I tried the breakdown of 391.4 again because I figured It was breaking down. Maybe this recapture was a liquidity grab to trick us out. Boom. Entered puts again. Took profits at 390. The same play. I did the same play twice. I was 2 for 3. I was well green and I was done for the day. I shouldn't have been done for the day because look at this move afterwards. It was beautiful. After 391.4 was recaptured, that's when we just smashed right up. It hit 393. Okay, got a little tricky false breakout setup here. And it dropped back below the test support. Got a few cents shy of it. But once it recaptured again, there you go. It just melted up for the rest of the day. So Uncle's strategy is not 100%. And I will never tell you it's 100%. And you know what else I will tell you? There is no strategy in this reality that is 100%. It does not matter what strategy you do because you will never be 100%. You will never be right on every single one of them. You could be 19 for 20. You could be 99 for 100. But you'll never be 100%. Risk management. Respecting your stop loss is a must. If you cannot respect your stop loss, if you cannot keep your losses smaller than your winners in the long run, you will not be an overall profitable trader. You might as well not waste your time anymore. Okay? And I'm not saying this because I hate on anybody and I want to see people quit. I want to see more people get into trading. I want to see more people become successful. It's good for business and it's the community that I love to be a part of and that I get to contribute some of my own stuff. I'm just grateful for that. I'm thankful for that. But I'm not thankful when I see people losing for the same reason they've been losing and not learning from their mistakes. Guys, listen to what I'm saying. Become a master at risk management. Become a master at respecting your stop loss first. From there, get better with your accuracy. Once you got risk management and good trading accuracy down, you will be a profitable trader. If you have good accuracy, like you got higher than 50, 60, 70% accuracy, it doesn't matter how accurate you are if you cannot respect your stop losses. You could win 10 in a row, but the 11th and 12th trade that you don't respect your stop loss could wipe out all your gains. I'm not saying anything original here. I'm not saying anything original. I'm not saying anything you guys ain't heard before. Okay? This is important stuff. So you can come up with all the strategies you want, but if you cannot respect your stop loss, you will not be a profitable trader. Cut the damn loss if it's losing and reset. It happens to me all the time. This trade right here, when I entered puts, I got stopped out, man. The day before, yesterday, I got stopped out on some trades. It happens to the best of us. But the best cuts their loss. Okay? So, what's the plan? What is the plan now? Let me go to the 1 hour chart, okay? So the plan now is, you see where SPY ended the day, right below that 396.5 level. As you guys know, that's one of my Fibonacci levels, all right? That's one of my Fibonacci levels. It needs to stay above 395 and clear 396.5 to be bullish. I go back to the daily chart, all right? 50% fib level is 396.5. Now this pink line, that's what the 395 level is based off of. We have many tests as support and many tests as resistance. Okay, and if you guys recall, I mentioned that I had a head and shoulder pattern. This is the left shoulder, this was the head, and this was the right shoulder. Okay, so this pink line right here was supposed to be my neckline, and the SPY is trying to recapture that right now. And if it does recapture the neckline, then obviously it cancels the head and shoulder pattern. So as long as above 395, bulls got a shot at more upside and maybe go test this yellow trend line, but they will need to clear 396.5. This doesn't necessarily mean we're bullish with the SPY yet, okay? We need to see a breakout of this bear flag, preferably a breakout of this yellow trend line, and we got to clear 408. That's a 23.6 fib level. All right, bulls have a lot of work to do, but if it give us a dead cat bounce or a rally, whatever, I'm just looking for level-to-level moves. I will trade it. If the market drops back down, though, drops below 395, okay, and drops back below that 200 daily moving average, which has been struggling to break down lately, okay, then I would be bearish. Below 391.4, 390, 388.5, 387. Anytime a support fail, I will look to short. Okay, I will look to short and play it level to level. Okay, now when would I swing puts? If we can actually get a daily close below 391.4, I would swing puts. If we can get a daily chart close below 384, now 384 is very critical. That's a 78.6 fib level, and it's also based on my yearly trend line. 384, I would swing puts if SPY is below that, okay? Now let me show you my yearly trend line because I haven't shown it in a while. This is a weekly chart. You guys see here, touch here, okay? January 3rd, 2022 high, March 28th high, August 15th high, November 28th high, and January 17th for 2023 high, okay? So that's my my yearly trend line. It's at 384 for this coming Monday. All right, guys? So bottom line, if we're gonna be bullish, it needs to hold 395, hold above it, and clear 396.5 to start, and then we could test more upside 398, 400 to 400.5 zone. That's the 50 daily moving average. 401.6 in a test of the resistance of the bear flag, as well as my yellow trend line. We have an area of confluence here. All right, it's all the way up here around 404ish. Okay, above 404 would be pretty bullish, guys. So there you have it, my SPY price action analysis. Now here's QQQ. It's chopping. We see it chopping right now. It's decent size range, 307 to 313.6s. We rounded to 314. Okay, so as far as being bearish, obviously, like I said, breakdown supports 309 and 307 I got right now. Below 307 would be pretty bearish because we have 2 days in a row where it showed a strong buying pressure. You can see by these daily chart candles right here at the wicks. So below 307 would be pretty bearish. It'll put 303.8 in play. That's a fib level. My 61.8 fib level. Break that down. That would be pretty bearish. Put in 301 and 294 to 295 zone back in play. This trend line right here. And then below that, we'll put 293. There's a gap around 290.5-ish and then 286.7 with 284.88 below. Okay, fib levels. I love my fib levels, all right? So basically, I will be bearish, or I will be more bearish or bear bias below 307 and 303.8. As long as it defends, we could get more upside, guys. QQQ could be basing for more upside. It needs to clear 311, 313. Let me adjust here. 311, 314, and 315.2-ish. Okay, those are resistance with 317.2-ish above. All right, there is a gap for QQQ around 322, 323 zone. All right, so keep that in mind. Up to 323, there's a gap. It's another gap around 328.3-ish. All right, lots of gaps, but it needs to, the bull case continues if it can clear 311 and hold and defend 307 as support. Now we got a false breakdown setup on the IWM. Okay, Thursday we broke down the 78.6 fib level, which was at 170.3. Friday we recaptured it. So 170.3, okay, it's very critical. If IWM stays above 170.3, stay bullish. All right, watch the breakout of 174.3 and 176.5 to put 179 and 181 to 182 zone in play, okay? But bullish as long as above 170.3 to keep the false breakdown setup intact. Now, if it breaks back below 170.3, that's your indicator to turn back to bearish. False breakdown setup did not work out. It's canceled, and we could drop back down to 168-ish to 167.5 zone with 165 to 166, 165.7 to 166 zone. And then this is critical support at 162.5, all right? So keep it simple. Above 170.3, bullish. Below, switch back to bearish. Apple, it's, guys, I got fib levels from all-time high down to January 2023 low. Apple has been basing and lingering just under the 61.8 fib level at 160.5. This is not very bearish. Okay, when it hit a critical level, you want to see sellers step up and show their conviction and pushing the price down and being bearish. That's not what's happening. Instead, we're basing just under resistance. Okay, which is showing price acceptance. So if it can clear 160.5, look to long with 165.6 in play as my target. Okay, I would look to short below 157.5 and 156. Okay, below 157.5 and 156 would be bearish. Targeting 153.5, 150, 147.5, and there is a gap at 146. Okay, guys. Tesla, it's bouncing off that 20 daily moving average still, the yellow line. But like I always say, we can't just play defense. Got to play offense. And right now, the bulls are playing defense, but they need to play offense and clear this bull flag. 194 is the breakout of this bull flag now. Okay, break out the bull flag. We can see 200.5, gap fill at 203, and maybe go test 211 again. All right, now watch the support at 190.3 and watch that 20 daily moving average at 188.5. If it breaks down, look to short. We got a gap at 183, some support at 180, critical support at 175.6 and 173.4. If we break down 173.4, I'm favoring new lows. Probably there is support at 168.5 and 163.5, but I would favor a test of 159.7 or maybe the support of the bull flag at all the way down at 151. Okay, let the price action guide you guys. DXY recapture the Fibonacci channel line that I got here at 102.6. Now it needs to show follow through. It's testing 103.4 as resistant right now, very close. So it needs to clear that and recapture 104.1. If that happens, I would be bullish on the DXY and I would favor we go test 106.1 or maybe higher up to 107.8. Okay, now if it drops back below 102.5, then I am favoring we go test 101 to 100 zone. VIX, we broke down that 38.2 fib levels at 23.87. And the last couple of days, we've been testing it as resistant here. All right, so we broke down that level on Tuesday, 23.87 fib level, and Thursday, Friday, you see it, long wicks. So to show follow through, it needs to break down 21.2. If VIX does that, that will be bearish. Okay, only way to cancel it is if it recaptures 23.8, and maybe we can build a cup to the upside. But if not, and it breaks down 21.2. That's bearish, okay, guys? Now, here is the option flow. I'm going to filter it for 500K premiums or above. This is the SPY. All right, Discord members, if you're on tier 3, remember you guys have access to this. You guys can add any filters and use it however you want. But looking at this, 66% in the puts compared to 34%. All right. So big money is still overall bearish. But the ones that stick out are the one with big size. And they're usually sweep orders, the one that I like. This is a block order, but this one's a sweep order. It is calls April 6, fall 6 strike price. Okay, that's worth noting. All right, somebody, the few, not many of them, but the few, is aggressively betting to the upside. But overall bearish, as you guys can see. Triple Q, 92% in the puts. Very bearish. This one is a sweep order. 280 strike price for May. They got time on it. All right, over 5,000 in size. They got time on it. This one's April 21st, 275 strike price. Okay, they got some time on it as well. About a month. Okay, so aggressively, big money's betting to the downside. IWM, 84% into puts. Mostly block orders. Mostly block orders, as you guys can see. But the one that does stick out is this sweep order. 161 strike price for April 21st. So big money. Something we see they have in common here is that they're bearish for April. Apple, 97% for puts. You're seeing big money betting here. 3.9 million in premium. 160 strike price. All right. So it's kind of in the money. This one is more aggressive. Out the money. For June 16th, though, this one's June 16th, 145 strike price. All right. And did we get Tesla yet? Tesla is 74% into puts. All right. Nothing that really sticks out though. And last but not least, the VIX 92% in the calls. Price action gonna need to match this. All right. But other than that, thank you guys so much for watching. I hope you guys found value in this video. And if you guys want more content from me, please consider joining Uncle Charles' Discord. The information is in the pinned comments below. Thank you guys. Peace.